Now, when we talk of IS 41 agriculture, we are not writing. I want you to get the background. You know very well that people view farming as something which is not very serious. In fact, if I can ask all of you one by one what you do, the scare, chief accountant, auditor, I don't know what. Then to mwingine aseme. So when people say accountant, people will not even be bothered. Then when one at the back says a farmer, everyone will be turning back to look at this farmer. How do you farm and you are studying CPA? Farming, in fact, ilikuwa debate in primary that a farmer is, who is better than teacher? Ilikuwa teacher is better than a farmer. But do you think it's true? Huh? As life has taught you now, so you have gone through life, it is still the same that a teacher is better than a farmer? No, a farmer is better than a teacher by far. So we want to check where a company or an entity engages in commercial farming activities. On assumption that you are the owner of the farm or you are the accountant. So you are in a farm setup whereby these people are, maybe they have, they are dealing in forestry, there is maybe fishing, they have livestock, they have poultry, among others. Then you are the accountant of the farm. How do you prepare the financial statements? Because there are so many transactions which happens in the farm very casually. The owner of the farm just comes and picks 2 fish. Employees in the livestock, they just drink milk the way they feel like. You are the accountant. If by the end of if maybe workers are consuming 1 liter every day, they just consume. In a month, these are 30 liters. If they could have not consumed, these 30 liters would have sold. But now it has been consumed by the farm workers. The owners of the farm took some products from the farm without paying. If they could have not taken them out, it will have been sold, and in the books you could have recognized that one as part of what? Revenue. But now they have been taken out of the farm without any cash inflow. How do you account for them in the financial statements? And which are the financial statements which you are supposed to present if you are doing farming accounts? Are we together? So that is generally what we want to do. Which books to prepare and those small issues in farming accounting. So write for me there. That's online. We are writing. So you say the objective of IS 41, the objective of IS 41, the objective of IS 41 is to establish standards of accounting, for agricultural activity, and management of the biological transformation, of biological assets, full stop. So that is the main aim. Key definitions down there. Key definitions. Number 1, biological assets. So that one is normally defined in a very simple term. You say living plants and animals. Living plants and animals. Living plants and animals. So when we go to the questions, you will find the examiner saying biological assets during the year were valued at 100,000. So when they just say biological assets, then it means the animals which were in the farm, cows, camels, and all that, plus the value of the plants which were in the farm. Those are categorized in one and called biological what? Assets. I wonder whether human beings are you also a biological asset? It depends. It depends. Yes, human beings are biological assets. Like, or I hope I will not be biased to ladies, because ladies are not fans of football. But there is a time Man U was recognizing who as an asset in the books. Who was this? Huh? We had this idea. Where is this other one? Whoever was being recognized in the books as an current asset for the club. Number two, there are plants. There are plants. There are plants. Then you say, is a living plant a living plant? Is a living plant that a living plant that full colon Roman 1, it will make sense. A living plant that full colon Roman 1 is used in the production, is used in the production or supply, production or supply of agricultural produce, or supply of agricultural produce. Roman 2 is expected to bear produce, for more than one period, full stop. Number three, the definition, agricultural produce. So if they tell you agricultural produce were estimated at this, so the meaning of agricultural produce, you say the harvested products from biological assets. Next and last, cost to sell. Then you say, is the incremental cost to sell, is the incremental costs directly attributable, to the disposal, of an asset, excluding finance costs, and income taxes. Full stop. Subtopic, initial recognition. So initial recognition is when should an entity recognize biological assets in the books? So you say there, an entity should only recognize a biological asset, if the following conditions have been met. If the following conditions have been met. That is a frequently asked question. If the following conditions have been met. So they normally ask you to state the conditions which must be met for an entity to recognize biological assets in the books. So number one, the entity must have control. The entity must have control. The entity must have control over the biological assets. Let's write, I'll explain. Over the biological assets as a result of past events. Control over the biological assets as a result of past events. Number two, if it is probable that future economic benefits will flow to the entity. And number three, there are only three. And number three, if the fair value or cost of the asset, can be measured reliably. Full stop. So can you go through the three? Then we can discuss where necessary. Because I've said that one, even if we start checking the questions, we'll meet it along the way. Conditions which must be satisfied for an entity to recognize a biological asset in the books. So number one, we are saying the entity must have what? Control. Control is now is defined in the context of ownership. In, for example, in our village where I come from, there is this actor. If you are, maybe you are in Nairobi and you have maybe cows back in the village. So you see you are held up. You cannot come from Nairobi, then you go to the village to look after the cows. So what you can do, you can give your friend, a neighbor, that cow to look after. Then when the cow gives birth, the neighbor benefits from the milk, then you benefit from the cow. I don't know if that happens in your village. Yes. Yes, it happens. So the person who has been given has no control in terms of ownership. So when that person is valuing their biological assets, that cow which you have given them, they should not recognize them in the financial what? Statements. You only recognize if you have ownership, which now in this context is being termed as what? Control. Then number two, what did we say? The future economic what? Benefits. So the standard requires that you only recognize a biological asset to the extent that there is something you expect from that asset. For example, let's say, which is the tallest building in the country? Wacha mtu aseme yenye namfurahisha. Ati archives. The highest floors is, and the tallest? Ni Britain mama ni UAP? The tallest up to the year. Ni Britain. So let's see what other people are saying here online. Okay. So now, whichever is tallest, so let's say that Times Towers is the tallest, just an example. You have maize in the farm. How long does it take for maize to mature and everything is done and the harvest is done? 6 months. So roughly we are told 6 months. Then here comes whereby you have maize in the farm. They have taken now 3 years and there is no, you are not seeing them having, how do we call those? I don't want to use Swahili because I know we have some people here who are not, who don't understand Swahili. But in Swahili tunasema mazao. You know those things. So the maize now is in the size of Times Towers. And there is nothing you are seeing. There is nothing you expect from them. What do? You just cut them down, then you start afresh. Then it means there is no future economic what? Benefits you expect. So you only establish, you call the people of agriculture, they do estimation, but to the extent that there is something you expect. If there is no expectation, then there is nothing you need to recognize in the books. Cows do have how many legs? Jeff? How many? 4. So here your cows, they're only having 1 leg each. The probability of getting future economic benefits is very minimal, very minimal. So in that context, you're not allowed to recognize in the books. Then the last one is the fair value or cost can be estimated reliably. Like you remember the other week, which the other week, not even the other week, this weekend, you remember we did not have class on Saturday because I was traveling. So I was in the up country. Then there was this, I found a certain lady in the farm. She was harvesting groundnuts, but they were not the real groundnuts. They were something which is very unique. So when I asked her, she told me that that one she got from Middle East. The sister came with that seed from Middle East. And it was tasting sweet. So I asked her, how much do you sell one what? Gorogo. That one. And she told me even, actually she said, even me, I don't know how much it's supposed to be sold. So if you don't know the price of the product, what are you going to recognize in the financial statement? Because financial statements we don't recognize in terms of facts. We recognize in terms of monetary what? Value. So if you don't know the market value, then there is nothing you can recognize in the books. So those 3 conditions must be satisfied. 1, you must have control. 2, there must be expectation of future economic benefits. And finally, 3, you must be able to estimate the fair what? The fair value. We move. Measurements. Measurements of biological assets. You say agricultural produce should initially be measured at their cost. Initially be measured at their cost. So for example, you check the cost which you have incurred on fertilizer and everything, then you get the value. However, initially measured at cost, however, in the subsequent periods, they should be measured at fair value. They should be measured at fair value. Always remember fair value is the market value. Measured at fair value, less cost to what? To sell. Fair value, less cost to sell. Full stop. Full stop. Now, there are some notes here which I want us to write, though they are not very structured, but they are going to be very important when we go to the calculations. I don't know how you're going to write that subtopic because those notes are They are not part of the structured notes, but they are things we need to capture. So I just want you to write them as important notes. Just say important notes. Important notes. So there is something which, there are things which normally happens in the farm, which people normally overlook and which are very important when it comes to preparation of farm accounts. If I may mention them, one is the shareholders' consumption, the farm owners. They just come to the farm and they just eat. Remember, you are the farm accountant. I don't know whether you are looking at this farm as a serious farm. Let's say, which farm do we have in Kenya? Delamere is a farmer. Yes. Yes, so let's say you are the accountant there. So the owners of the farm, they just come with their friends. They just greet you, hi, you are good. We are here with our friends, engineer, so and so. We are just strolling. Then in the strolling, they take things from the farm. And you know, you cannot question your employer that why are you taking some things? You can only check what they have taken. Then now, at the end of the reporting period, those things need to be accounted for. The day of harvesting, the owners of the farm, they normally come to, they can help the workers in harvesting, pretending that they are also serious, but their main intention is to check whether you're disappearing in the harvest. True, yes. So if they come and help you in harvesting, do you take that one for granted, or should we account for them in the books? Farm workers have been paid in kind. In kind is whereby instead of paying them cash, you can give them some farm produce in exchange for what? Cash. So how do you account for that? The same way farm workers have consumed from the farm, which is very common, especially for groundnuts. I don't know. There are some people here who have never seen groundnuts. It's quite unfortunate. Yes, I know. From the experience, I know there are some people who have never seen groundnuts when they are growing. They only see them in the streets. Have you seen groundnuts the way they grow? You see? Some people think groundnuts are normally harvested on trees. Groundnuts, you see the one ground. They are always, this is the ground. They are always, you have seen cassava or the one is called what? Or sweet potatoes. You have ever seen how they normally grow down there? Even groundnuts normally like that. So they uproot them. So groundnuts were very sensitive. When farm workers are harvesting, they normally eat a lot. Yes, they are nutritious when they have not been cooked. Groundnuts are nutritious in the body. So people consume them. The only thing you need to have as the accompaniment for groundnuts is water. You eat small water. So if you are not careful, by the time they are finishing, one sack is gone. So how do you account for whatever they have consumed? So those are what I'm calling unstructured notes. But in the question, the examiner will tell you that during harvesting, farm workers consumed some products. These products were estimated to have a value of 1 million. Where do you take that 1 million in the books? During harvesting, farm owners provided labor which they were not paid for. No, they will not use that one which was not paid for. If they tell you that the farm owners provided labor, just know that they are never paid. And actually, even in most cases, imagine like now the ex-president who is gone, Uhuru Kenyatta, if he goes to his farm, do you think they normally go there to just to take pictures and post? So that people can see that dynasty is also trying. But in reality, they don't work. So how do you account for those labor which they have provided? Those are what you want to check. So other important notes, I don't know whether prayer time is, I don't know. So number one, you talk of shareholders, stock family consumption. shareholders / family consumption. If prayer time comes, please, you will let me know. So you say represents value of items consumed from the farm, value of items consumed from the farm, by the farm owners. From the farm, remember this farm now is FA, not FI. From the farm, by the farm owners. Full stop. The amount consumed should be recognized as revenue. Very tricky there. Should be recognized as revenue in the respective revenue account. Should be recognized as revenue in the respective revenue account. In the respective revenue account. And recovered from their capital, recovered from their capital as drawings. Are we together? Yes. So if they came and plowed in the farm, then you estimate they have done like a quarter, an acre. Then you work on what if they consume like, if they are bananas, they consume 30 bananas. So you say that what if they never consumed? What would have happened? We would have done what? Sold. So we could have gotten revenue. So on that assumption, you check, bananas are found in the crop account. You go to crop account, you recognize that value. So you say 30, what is the market rate? Though that one examiner will have done for you. I'm just going practical part. Banana 30 will have been this much. Then you go to the crop account, you recognize that one as revenue. But now you see they are not paying. Sure. So the respective entry is you to reduce their capital. Because if they consume every day, so the farm will come down. So if they consume, if you get family consumption, and the family or the shareholders include their relatives. If you are told by the examiner that there are some things they gave relatives, that one is also classified as part of the shareholders or family consumption. So if they consume, nothing to worry about, bring it as revenue in that account. Because you know why? Let's go into details. They have two departments. I'm assuming they have two. There is livestock and there is crop. Then the manager said, the owners of the farm said that the manager whose department is going to perform well is going to be rewarded. And the performing well here is going to be based on revenue. And revenue here is what? Sales. So we want to check on the livestock, how much milk did they sell? On the side of crops, how much crops did they do what? Sell. Then on the crop side, the owners of the farm came and eat. So what were you expected to do what? To sell? Nothing. Sure. So what you do, you don't worry. If they consume, you bring it as revenue still, so that your revenue is not suppressed. Bring it as revenue on assumption that it will have been done what? Sold. Then you go and reduce their capital. And that is all. Are we okay there? Yes. Number two. Now prayer. Let's just write number two. There we go. Number two, I want us now to check. Workers consumption. Stroke payment. Payment in what? In kind. How do you deal with them? Workers have just eaten, or they have been paid in kind. How do you account for that? So let's go have prayers, then we come back, we continue with that. Then during the prayers, if you don't have past paper, please make sure you have it, because I think after those few issues, we go to the questions. So just make sure your paper is ready. Online, There are some people who have been added. You can repost physical. If you don't have to check over the reception. Thank you. So repost for them. Oh, you are new. So then, yes, can you repost in the group for those people who are new? Bye. Number 2 was about what did we write? Workers' consumption for payment in kind. You say we are writing online. You say workers' consumption represents workers' consumption represents the value of items, represents the value of items consumed by the farm workers. Value of items consumed by the farm workers. Full stop. Payment in kind, on the other hand, payment in kind, on the other hand, represents the value of items, given to farm workers, instead of cash payments. Full stop. Another hyphen. Both workers' consumption and payments in kind, should be recognized as revenue, in the respective revenue accounts. And recovered from their wages. Correct. Recovered from their wages. So if they consume, that is not your problem. Bring it as revenue on assumption of what if it was done what? Sold. So just bring it as revenue. Then when you are paying them the wages, you do what? You reduce. So reduce their wages with whatever they consume or with what they were paid in what? Kind. Number 3, shareholders stroke family labor. Shareholders stroke family labor. Then you say represents the value of work. Carried out by the farm owners. For free. Actually, it's normally for free. Full stop. Another hyphen. The value of work should be expensed. Why are we expensing it? If they will have not done that work, we'll have hired someone to do it. Sure. Yes. You know, it can be a good way of escaping tax. Huh? No, not even escaping. It will be as serious if you are the accountant. If you don't expense it, you know, profit will go up. Because if you could have hired somebody, you could have expensed that labor. And when you expense, profit goes down. The lower the profit, the lower the tax. But you see, if you don't expense that amount of the work that they have done, profit will go up. Then they will end up paying what? More tax. So they have worked, then again they are paying more tax. So when they work for free, come and expense on the assumption that what if someone was hired from outside to do that work. So what have we said? Should be expensed in the P&L account, that is profit and loss account. Should be expensed in the P&L account and credited to capital account should be credited to capital account, full stop, continuation. It is considered to be a value addition to the firm. It is considered to be value addition to the firm. Considered to be value addition to the firm. Value addition to the firm. Full stop. Correct. Correct. That's it. So if they work, don't worry, expense, increase their capital because they will not be paid. So they are just adding value. Then number 4, which should be my last one, call it what? Inter-economic transfers. That is the last one. Inter-economic transfers. So before we write, when we talk of inter-economic transfers, which example can I use this? Check here. We have livestock. Then we have crops. So what are the byproducts from livestock? Now, which is we call it manure. Sure. So from livestock, we can get what? Manure. What did he say? Meat. Meat is not a byproduct. The product itself. So here we can get manure. Then here we can get what else? So you find that during the year, you have transferred some manure from livestock to the crops. Then during the same year, you have transferred some crop to feed the livestock. So that's very possible. So how do you deal with this? It's the same farm. You don't assume as an accountant, you don't say that that is normal. Manure, which could have just take it to the farm and that is all. No, you have to do the accounting. Because what if we never had crops? What would you have done with the manure? You would have sold. Sure. So, but now we are transferring it within the farm. So if we have inter-economic, okay, first of all, inter-economic transfers is the transfers of items within the same farm, from one department to another department. So how do you account for it in the financial statement? So let's write and say, this is the transfer of items. Transfer of items between different sections. Items between different sections. Between different sections within the same farm. Different sections within the same farm. E.g., for example, let's just say this one, Transfer of manure from livestock to crops. Transfer of manure from livestock to crops. Full stop. So how do we account for it? So right there I'm saying the transferring, and that is now what is important. Definition is not even important. The transferring section should recognize a revenue. Should recognize a revenue. Should recognize a revenue. While the receiving section, I said transferring section should recognize a revenue, while the receiving section should recognize an expense. Should recognize an expense of the same value. An expense of the same value. Full stop. So if they tell you that they are transferring manure from livestock to crops, livestock recognizes revenue, while crops recognizes what? An expense. Both on what if assumption. What if they sold? If crops was not there, livestock we could have sold. Sure. Then we say we have given out 20 barrels of manure. That one would have been 5,000. So now, because we have not sold, we have given crops, let's recognize that revenue. Then crops, what if livestock was not there to give us, we could have bought from outside. So the receiving expense, while they're sending, will recognize what? Revenue. Then it cancels because it is within the same. So we are due for illustration. But before that, write for me books of accounts, the books which they maintain, books of accounts. By the way, before I mention the books of accounts, there are things which normally, especially the Bontown students, you know, there are students here who have never gone to the farm. Have you seen people who have never gone to the farm? Have you been to a farm? Shamba. Kulima. He has never been to a farm. Many people are wondering. You are wondering. Yes, he has never been to a farm. You have been there. Not to take selfie and post. Serious one. Have you been there? Maybe you've been there. Serious one. Even you. So can we look for one farm? CBC, yeah? People who are born down, there are some things which we normally say a very big problem when it comes to accounting. The examiner might tell you that there was a Napier grass and the maintenance cost of the Napier grass maybe was 10,000, just example. Now during the year, the farm incurred some cost to maintain the Napier grass. Where do you classify that cost? Assuming we only have two departments or sections, livestock and crops. Where do we classify Napier grass cost? Do we throw it to livestock or do we throw it to crops? I'm walking like this. Ask your neighbor. Online you can write for me there. Ask your neighbor. What do you think? Your neighbor stinks. So tell me what your neighbor is saying, not you. What does the neighbor say? Where do we take Napier grass cost? Do we take it to livestock or to crops? What does your neighbor say, not you? What is the neighbor saying?
My neighbors are saying that it's a crop because it's still growing. It's grown.
Okay. So I can even see John is saying crops, but Trevor is having a different opinion. that it should be expensed to livestock. So how many people are of the opinion of crops and how many people are saying livestock? We are just learning. There is, I can see seriousness, ability behind there. Don't be serious. We're just learning. Eh? The question, and what were you answering? Yeah. No, the question is, the examiner tells you that in the farm, there was napier grass. Then they tell you the cost of maintaining, you know, napier grass, sometimes you have to sprinkle water and the rest. The cost of maintaining, they just tell you in note number 4, for example, the cost of maintaining napier grass was estimated to be shillings 10,000. Full stop. They leave you at that point without any further clarification. Then you have 2 sections in that farm. I'm assuming 2. You only have livestock and you have crops. Those 2. So it's an expense, yes. But on which, because the books we are going to prepare here, farm, we prepare 3 books of accounts. 1, we prepare the what is called revenue account. So revenue account, you prepare for each section. So each, if it's livestock, you come up with livestock account, you come up with crop account, poultry account, like that. Then after that, you prepare profit and loss account, which brings all of them. You combine them as one, then the balance sheet. So the napier grass expenses, you take them to the revenue, which is the departmental accounts. So I'm asking, if we have only 2, livestock and crops, where do we classify napier grass costs? Do we take it to livestock or we take it to crop? You have changed?
No, I think maybe you should tell us what napier grass does.
But if I tell you, then I've given you an answer straight away. If I say that I've already, so Hamza is even giving explanation. So when you come across napier grass, unless, I don't know how that grammar is, it is always unless otherwise stated or unless stated otherwise, which is the correct one. Yes, unless stated otherwise, napier grass is expensed in livestock. Yes, because rarely, if you find those 2 sections, livestock and crops, you cannot have livestock, then you have napier grass to be selling to people outside. It is assumed that napier grass is to feed what? To feed the livestock. So if you come across napier grass, unless otherwise, napier grass is classified as part of livestock. So that one, take it seriously. So, you know, crops, when you take it to crops, then it means if we get proceeds, then those proceeds we are selling from the crops. We don't grow napier grass for sale if we have livestock, unless livestock is not in that farm. But if it is there, then the main objective is to feed the livestock. Then if we sell outside, that is now the otherwise we are talking about. All right. We have cows and bulls. We have cows and bulls. Cows and bulls. Cows are never depreciated, but bulls normally undergo depreciation. Cows are treated, you are using the cows here are depreciating. Who can be classified here as cows? Can you? Yes. But bulls undergo what? Depreciation. So if you are told that livestock were to be depreciated, then that person becomes quiet. Then what you depreciate are the bulls. Don't depreciate cows. Let's go to illustration. So get out your past paper. Let's get out, I don't know which sitting is 2020. Let's go to illustration. It was examined just the other day, not long ago. 2020, yeah, 2020. So check November 2020. November 2020. I don't know which question you asked me. You got it? November 2020. That is 2021. November 2020. Where is November 2020? I got November 2020. Page 37. Thank you. So check page 37. Oh, you are lying. The question itself is not on page 37. But it is question number 5, which is page 41. 2020 is not in one page. It's spread. So, oh, no problem, John. I'm giving I'm giving you the list of books. So November 2020, question 5, that is page 41. There's something I want to do there to before we start. It's 2020. No, it's November 2020, question 5. Sure. Yes. Mine is page 41. I don't know whether someone is having a different page. The one calling itself the following David Wekesa. You got it? Huh? Okay. Just let everyone be there. There is no hurry. Yes. I want to use it to write the books of accounts. Yes. All right. So, are you seeing that question? Pass your eyes up to where we have required. Are you seeing the required? Required. You are seeing required. Roman 1 is what? Required. Required Roman 1. Revenue accounts. That is book number 1. Put in our notes. We were writing books of accounts. So in any question you come across, you will get those ones. Revenue accounts. Required Roman 2, as per them, is what? Income statement. Hold on. In the accounting standards, I don't know why the examiner did this. In 2018, accounting standards changed. We no longer talk of income statement. I don't know that you're aware. Are you aware? Huh? Are you aware? If you hear anybody talking of income statement, that person is staying in the dark. Is not, he or she is not updated. We no longer have income statement. It was replaced in 2018. We nowadays call it statement of profit stroke loss. We don't have income. Even in class sitting, if you can check class sitting questions, I don't think if examiner is again talking of anything to do with the income statement. You will see statement of profit or loss. So it was changed in 2018. Who changes standards? ISB. You know ISB? International Accounting Standards Board. They are where? UK. They are the people who change standards. They communicate to us through ISPAC. So in the current questions, you will not see. Okay, I think 2020 they have not adopted, but nowadays you will not see income statement. So book number 2, don't write for me income statement. Just write statement of profit stroke loss. Then finally, the obvious statement of financial position. So those are the books which you will be required to prepare. If I become a bad examiner, I just give you a question, then instead of listing the 3, I tell you, prepare the 3 final accounts for the above firm after giving you the question. So it is you to know that we prepare revenue accounts, profit account, and statement of financial position. So the issue comes on the revenue accounts. And students normally confuse between the two, the revenue account and the profit account. Revenue account is departmental, those sections. You can have as many in the same farm, poultry and all that. And also some students, but nowadays I think nothing is not there. there are students who are getting difficulties on the items of poultry and livestock. Yes, there are people who don't know what goes to poultry. You find that someone is classifying milk in the poultry account, then eggs in livestock. And they say after exam, today it was very nice. So you need to know what goes where. So get this, if you are told to prepare revenue accounts, those are departmental accounts. You see, like this college, we have how many sections in CPA? 1, 2, 3, 4, 5, 6. So if I'm told to prepare revenue account, then I prepare for section 3 alone. That how many students do we have? How much fees have we collected? This, what was the expenses? Then this is the revenue from there. This one here, all. So when you prepare all those departmental, then those are revenue accounts. Then I come and combine all of them. I take all the revenues from each section, then you bring it as one. Then now what you're preparing profit what? Account. So profit account brings all of them. Revenue accounts are departmental. So in this particular question, when we read, and they are very mean, they will not tell you which are the sections. It is you to identify. When you read, when you see fertilizer, fertilizer is in which section? Crop or livestock? Oh, manure, when we see manure, livestock. So the departmental, you'll be guided by the, whatever they are writing, the write-ups can be able to guide you if they don't say. So allow me to go through this question with you. My target is to do one revenue account. Then I give you assignment of trying that other revenue account so that tomorrow we see whether we're in the same line. Sure. Yes. Let's read the question. So this is November 2020 question. Let's read. The following trial balance was extracted from the books of David Wekesa, a farmer. I said David Wekesa. As at 31st October 2019. So please let's read the items. When you read the items, you can be able to know the department. Inventory. At the beginning of the year, there was dairy cattle, there was maize growing, dairy cattle feed, fertilizers for maize. Land and buildings, tractors at net book value, other cattle, bulls, cats, net book value. Purchases, there was purchases for dairy cattle, fertilizers for maize, then there was also fertilizers for Napier grass. There was purchases for maize seeds, there was purchases for dairy cattle feed. Then there were sales during the year. We sold milk, dry maize, green maize, dairy cattle, manure. Expenses, crop expenses, there was labor and other expenses. There was Napier grass labor, then there was general what? Expenses. Trade payables, remember trade payables is the creditors, which is a liability. Capital, cash at bank, dairy cattle, expenses, there was medicine, labor, and other expenses. Before I go to the additional information, how many departments or sections do we have in this question? There are 2. Sure. Yeah, there are at one. There are 2. Which one and which one? There is crops and livestock. Sure. Or someone has seen poultry somewhere? If you have seen poultry, there are only 2. Additional information number 1. Inventories as at 31st of October 2019 were valued as we can see. There was dairy cattle. So cattle has been classified as stock, maize growing, other cattle, bulls, and bulls will not be stock. Dairy cattle feed, fertilizers for planting, maize. Those ones are there in the stock. During the financial year, the following distributions of farm produce were made. So product being distributed, maize consumed by family members was valued at 1080. Then there was milk delivered to relatives hotel, 4320, in total 5400. What is that concept? The examiner is trying to check whether whether you know what the concept of, just say the family consumption. That entire number 2 is about family or shareholders what? Consumption. Whatever the family is taking, relatives, those are family consumption. And you know how to account for it. We wrote there. Manure valued at 600,000 was removed from the cow shed and used in the maize plantation. Okay. Maize stock valued at 1.5 were used as daily cattle feed. I hope number 3 and 4 is the same concept in the transfer. So the giving recognizes revenue. The receiving recognizes what? Expense. Good. Number 5, cattle bulls are used for pulling carts. I don't know how that is relevant. I don't know how it is relevant. I don't know. Depreciation is to be provided on tractors and carts on the reducing balance method at the rate of 25 and 12% per annum respectively. Let me not assume, I know some of you have forgotten. Actually, some of us here are just coming from campus direct. And as a matter of fact, we know campus people don't read. We were just there. Now reading is now catching up with us right now. So reducing balance, you charge on net what? Net book value, it is the truth. Net book value. When they say reducing, when they tell you straight line, then we charge on what? Costs. But all in all, everybody will pass. Number 7. It is true. Campus. Even if you will know exam is there today, then tomorrow. You prepare yourself today. CASNEB, don't try that. You will fail. CASNEB, you start reading today when exam is in December. CASNEB, the campus, can you start reading now when exam is in December? Depends. Yeah. Yeah. It depends. Oh yeah. Yes, then they get D. Then those who are not reading can just get A and nobody cares. Number 7, income tax. The campus must you read? Can I be honest? Because it will cost me nothing. You know, there is an exam I never read and I never did anything and I got an A. What are they doing? Income tax is estimated by a very beautiful line. Estimated at 3.6, but don't apply that one here. It will be dangerous. Required revenue accounts for the year ended last 6 months. Income, which now P&L, statement of financial position. So allow me. Tell me which one do we start with? Do we start with crops or livestock? We can start with any. Which one would you want us to start with? But now, doing this, then going to that will waste a lot of time. We can combine them in one account. Then it will work. Let me try that one for once. All right, let's do this. Right there, David Wekesa, revenue accounts. Not accounts, but accounts. Revenue accounts for the year ended, what your eyes can be able to see. And I know there are some people starting CPA right now and they're being told it is very difficult. Nothing is dangerous, it's not dangerous. The same way you were told that in primary there is a class you were being threatened with. It was which class? 7. Very nice school it was. From 3. That mold, the small concept which is not moving. It moved and you are here. So even this one will move. Provided there is consistency. 2 things, consistency and punctuality. Those 2 things. Then there is no problem. So revenue accounts For the year ended when, students? For the year ended 31st of October 2019. So I want to combine them in one account to save time. So don't grow, just give me 1 minute and see how it will work. I've never done this before, but I think it's workable. Instead of doing them one by one, I think we can extrapolate this. Then let me have a space here. Then I have here enough space like this. Then I call it crops. Between crops, which one is more essential between crops and livestock? Which one is essential for your crops? So let's start with something serious. Crops, then livestock. So just have sufficient space there. Then shillings they're working in millions or thousands. Let's have 2 columns, one at the far ends, corners, there are corners there. So this will work. Then there, like that. So have something like this, and it will work for us. Have that. Have that. So we want to get revenue from each department. So to get revenue, listen to this. You start with the sales from each. What did we sell from crops, livestock? Then you less cost of sales. And the cost of sales will bring the inventory, purchases and all that. Then we less expenses. Then you get your revenue. Sure. So let's start with the sales. So give us here. Sales. So sales will be the far corners, for crops here, for livestock the other side. So let's check. Where? Please check sales. There is milk, and check those things related to milk. Milk is related to dairy cattle. Huh? Yeah. Those are one category. Sale of milk, dairy cattle, and manure. Do they go to one category? Those are livestock, sure. Then for crops, which ones goes together? Dry maize, green maize, only those two. Sure. So what you do for me, sales for crops. So you do this. Once you have written sales, here you say crops in brackets. Crops in bracket, what plus what? 36 plus 36 plus what, student? 11, 340. So add those two. Add the two. Add the two. What do you get? Eh? 47, 340. Good. Then we go to L stock. So L stock, that is the livestock. Also add those livestock components. So livestock components, we agreed on what? Milk. Milk is how much? 27. 360 plus what? 81, I agree. 81 plus 3. Yes, plus 3. 27, 360 plus 81 plus 3. How much is that? 38 for 60. Bring it here. You can even capture it somewhere here. 38 for 60. Good. 38 for 60. Then you say less cost of what? COS. That short form is known by everyone. Nobody can penalize you for that. So that's why it's less COS. COS is the cost of sales. So cost of sales is opening inventory plus purchases minus closing stock. Yes. So let's start with opening inventory. So opening inventory. Opening inventory. I will not bring so many additions. So let's be to the point. Opening inventory for crops. Crops, what are we taking to crops? You can add, actually you can add with your calculator. So what are we adding? What plus what? Maize and fertilizers. Huh? Yes, those two. Can you add the two? 36 plus 1980. 55, 80. Bring it in the first column. 55, 80. Can you add for livestock? Livestock, we are adding what and what? Opening inventory is the first item in the trial balance. Dairy cattle, 54,900 plus 25, 20. The dairy cattle fee. Add those two. Add those two. You get 57 or 20. Good. You add purchases. So add purchases. So check purchases for crops only. Purchases is somewhere there. Let's all focus. Let's all focus there. So purchases for crops we are going for. Fertilizers, capture in your calculator. Fertilizers is 2160. Napier grass will go to livestock. Maize seeds, 1080. Sure. So plus 1080 only. Sure. Yes. What do you get? 32, 40. Then let's go to purchases for livestock. Livestock, we are adding what, student? Dairy, 10 for 40. Plus Napier grass, 4. Plus what? Dairy cattle feed, 61, 20, yes. 25, 60. Less, what are we lessing? Closing inventory. Closing inventory is always in additional information in any accounting question. So closing inventory, check note number 1. There is in accounting rule, what was there in the opening inventory should be captured. That value should at least be in the closing. When you check opening inventory, the first item in T balance, dairy cattle, maize, dairy cattle feed, fertilizers. But when you go to closing, check closing keenly. There is dairy cattle, which is okay, maize is okay, but bulls, were there bulls in the opening stock? No, actually those bulls should not be treated as part of inventory. They are used for pulling calves. So I'll not consider bulls as part of the inventory. They were not even there in the opening. So I'll just compare the opening value of goods and the closing value of goods, then the difference I will treat as depreciation. Something like that, yes. So bulls, just ignore them. Bring these others. So in the closing inventory, what relates to crops? Maize, growing, less capture, 27. Then fertilizers, 1080. What do you get? 37, 80. Remember to subtract. Then livestock, capture for me dairy cattle. Dairy cattle are normally treated as stock. We can sell them anytime. 54. Bulls, no. We'll write a note to that effect. Bulls, no. Dairy cattle feed, 1620. 55. 55. 55. 620. Right somewhere, or if you have mastered fine, bulls are treated as long-term assets, and therefore we don't treat them as part of inventory. Or instead of long story, bulls are never treated as stock, full stop. So do this for purposes of time, because I'm afraid if we leave this one hanging, it will disturb me tomorrow to connect, because I will have to draw an order. So we have to finish this revenue account. So ladies first, ladies add this plus this minus this, gents this plus this minus this, so that we save on time. So ladies to check the first one, gents, let's check the second one. Online, whether you're a lady or gent, you can confirm what people are saying. You are our auditors. You can do random. So ladies, what do you get for this? 1040. 5040. Okay. Gents, what do you get for this? 360. In the same spirit, the same answer, you have gotten, take this minus this, you get the gross revenue. Gents, the same, this minus what you have gotten, you get the gross revenue. So gross revenue, you are talking of 40? 300, gents? Gents? This one should be? Wait, 42? 300? Okay, and this one? 16,100. 16,100. Good. Then you say add other income. No, not income, revenue. We use the word revenue. So add other revenue. So write it down here. Other revenue. So other revenue in farming, listen to this, they are very easy to get. Transfers, transfer to, then consumptions. Just check those two. Consumption, either family or workers, or payments in kind. Then you check transfer to. If there is something which was transferred from crops to livestock, it is a revenue here. If there is something which was consumed from crops, is a revenue there. So there were transfers. So right here, transfers. Just write transfers. Or on extreme, you can write transfers to. Let me just leave it like that. So what did we transfer from crops to livestock? Note number? Note number what, students? 3-4. 3-4-4. Maize stock valued at 1.5 were used in cattle. So it was transferred from here to there. So bring here 15. Then transfer from livestock to crops, manure. Sure. Manure was removed from here to the other side. What, how much? 600. 600. Let's go to consumption. Consumption, this was family. Family consumption. Family consumption. So go to note number 2. Maize consumed by family members was valued at how much? 1080. Bring it as income. You will trace their capital, then you reduce their capital. That's where you recover that money. Then for livestock, they consumed milk. 140 what? 4320. Less expenses. Less expenses. So expenses, we have to be very keen, otherwise we can mess. Let's check them slowly from top down, or we go bottom up. Let's go top down, one by one to avoid omissions. Before we forget, you see these transfers. Transfer to will be from again at the same time. So let's start with that. So transfers from is an expense to us. So what did we transfer from livestock to crops? So this one here, the 600. So this 600 comes here as an expense, while this 15 comes here as what? Expense. Are we together? Yes. 2 becomes from the other side where we expense it. Correct. Can we now go from top down, check it for any other expense? So from top inventory, no, land, no, tractors, no, other cattle, no, purchases, no, sales, no. But there is crop expenses, where we have labor and other expenses. Can we write this? We write labor, sure. We write labor expenses. Labor cuts across the 2 of them. Are you seeing Napier grass labor? Are you seeing Napier grass? Yes. Yes. Napier grass we touch on livestock. So labor here is 6480. And the other side, 1000. Yes, 1000. Then there is other expenses. Okay, there's a problem. This side. There's a problem that side. Napier grass was 1000, but I bring it separately. Because when you check the last item in the T balance, in the trial balance, are you seeing dairy cattle expenses? Huh? Yes. Dairy cattle expenses. Now this one, if you're not keen, we'll have problems on the arrangement. I know what to do. Do this. Just amend this for the sake of our time. Right here, crop expenses, the way they have said, then you add those two. 6480 plus 7 what? 720. Bring those two expenses. Then this side will put a dash. Then we'll bring theirs on their own. We must finish that revenue account, otherwise it will bring a lot of problems tomorrow if we leave it like that. So this one comes to how much if you combine those two? 70? 7,200. Good. Let's proceed. I don't have space online. I'm taking the camera up. Then write for me dairy cattle expenses. So dairy cattle, we are going to add the 3. Then I will bring Napier grass alone. Sure. Yes. So dairy cattle expenses. So dairy cattle expenses. Let's add what plus what? 1080 plus 9480 plus 1440. What is the total of the 3? With this place. Total of the 3? 12,000. 12,000 captured somewhere, you just proceed. You have the space. Then let's bring the Napier grass. Napier grass, what? Labor. Napier grass labor goes to livestock. How much is this? 1,000. Very good. Then let's continue with our expenses. General, there is general expenses. General means it is not there, it is not there. It will go to P&L. Are we together? Yes, general doesn't go to revenue account, so we'll take it to profit and loss. Trade payables, capital, cash, daily. We are done with the trial balance. Unless there is one, maybe you have an issue, we go to the notes. So to the notes, note 1, we have captured the stock. Note 2, we have captured consumption. Note 3, we have captured the manure. Note 3, we have captured the maize stock valuation. Cuts, depreciation is general. Sure, depreciation is not specific. That is general income tax, nothing. That is all. So I just ask you as that. So can you add all those expenses for crops, bring them here, you subtract. For this one, bring them here, subtract. Then what you get, you call it net revenue to P&L, profit stock loss account. So add for me the total expenses for each. So for crops, it's only 600 plus 72. Sure. Giving you 78. 78. Let's deal with this one and finish. So for crops, gross revenue was 42.3 plus transfers of 15 plus family consumption of 1080. So add those three. Then subtract 78, you get the net revenue. When you do that, what do you get? 37, 0, 80. It's okay. Yes. Okay. Let's go to livestock. Livestock is 1,500 plus 12 plus 1. That one will give us how much? 14? 14? 500. Subtract. So take 16,100 plus 600 plus 4320 minus 14,500. 60? 65? 20. Confirm? So that is how we prepare revenue accounts. Who has a question? So tomorrow we go to profit and loss account. You see how we transit from here to there. Yes, please. Yes. Should you add? Yeah, you can add total gross revenue. Total gross. Sure. Yes. How will I mark this? How many marks were we being awarded? There are many marks. So there are 6 marks. So if this one will be marked this way: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 16, 17. Where I've captured the ticks is what is marked. So there are 17 ticks. They are giving us how many marks? 6. So any 12 out of 17, any 12 times a half. Any 12 times a half. You cannot get those 12. So when we meet tomorrow, you can write David Wekesa, statement of profit stock loss. for the year ended that. Please, at your free time before tomorrow, class, go through the revenue account so that when we are doing another question, the learning curve becomes okay. Then John is asking, before you depart, why don't we go as per each item? As per each item here means, what is he asking? Oh, we do livestock, we do crops, we finish, then we go to livestock. There is no problem if you do that. What we don't want, there are some people who are using this account, T account, that livestock usage on the credit. T accounts are nowadays not used. We use the vertical. So John, there is no problem. You can do each at a time. The only problem is what? Time. In exam, we have two people. We have a student sitting for FR and we have the student sitting for FR. So which one do you want to be? A student sitting for FR or the student sitting for FR? And more importantly, you are from Alliance. You know, when you are from Alliance, so there's no problem, John, but time. FR, you know, is how many hours? 3. But those 3 hours is always like 30 minutes. You are in question 2, then you just hear 1 hour remaining. When you are trying to go to question 3, 30 minutes. When you are almost finishing question 3, I do have a good night. I want to end the class. I'm not even moving out. I want to sit here and send those things right now. The recorded classes. There are some classes I've been recording and I've never shared, and people are making noise. So you will come and tell me those dates. You know the dates. So thank you. You can leave at your own pleasure.